Okay, hi everyone. As I mentioned, I will be breaking down this kind of a flow chart that I made and posted on Discord. Um, First of all, sorry for the bad audio. I actually took the microphone with me, but I forgot to take that USB-C to USB thing for MacBook actually. So yeah, I have to use the AirPods. So I know the sound is not ideal, but we will just kind of have to go through it. Anyway, there is a bunch of new people in Discord. So first of all, thanks for joining. I hope you will learn some new things. But also, I would recommend you to kind of not skip all the way through this video. Especially if you are kind of new to things and going through the bootcamp. I wouldn't really just jump into this one because obviously I make these kind of updates in mind that I'm talking to people that already kind of understand all the concepts and everything. So definitely, take your time with this. But anyway, if you kind of followed along, I was these last couple of months, as I was moving, and now as I'm kind of traveling, torn between sitting in this kind of a more of a swing trading approach, or just kind of sticking to day trading, which I've been doing for last around 7 years or so at this point. So, and even though I gave this kind of a longer term swing trading a shot, and it was actually working decently fine, I kind of realized that with the money that I raised, and with kind of a overall the approach and with everything that is kind of going on, I don't actually feel too comfortable to just kind of leave a limit order, and just do nothing about it, and come back in a couple of days and just see if everything played out well throughout some events or some stuff like that. But I think that if you kind of take a more strict and scheduled approach to day trading, I think you can also make it work and still have a decent amount of time, split your trading into different sessions and make time for that. So first things first, let's take a look at the markets. I trade 5 markets. That's definitely kind of a lot. Once again, if you are newer into this, or if you kind of starting out, I would recommend you to do 2 markets. If you will go this way, which I do, which is this kind of a day trading approach, if you are going to go with scalping, then definitely 1 market is enough. But for this kind of a day trading approach, I think 2 markets with this H1 time frame for levels is definitely something I think you can manage, and then you can slowly add more markets. Or if you just really want to master one, you can just stick to 1 market. It's completely fine. Obviously, if you will go, and everything I will kind of talk about is applicable to everything, for all the time frames here. Obviously, if you will go this kind of a really bigger swing trade way, you are not going to need much of a order flow and all these things. You'll be just good with price action and volume profiles. But for these, especially these 2, that everything is kind of just stay the same. Just your trade frequency will basically change. So these are the 5 markets that I personally choose. You can see the correlations between them here. Obviously, the Bitcoin and Nasdaq have a fairly high correlation with each other, and they are both negatively correlated with Euro. But I think this is mostly because this is mostly a reason. I'm not really sure what kind of a time period this is. I think it's last 30 days or last 60 days or something like that. But I think in kind of a bigger scheme, this definitely should be a lower number. But besides that, they are fairly uncorrelated, and Bitcoin currently, how much is correlated towards the S&P and Nasdaq and everything. It's inside this kind of a US hours, so definitely there's still some room to trade crypto, as kind of this uncorrelated asset towards ES and NQ, but on lower time frames. Obviously, I'm not talking about swing trading. I'm talking about more of a day trading. It's it's described here as well. You have some alternatives. Why I picked NQ instead of ES? It's simple, because during the London hours, actually in the morning, the Nasdaq still have this kind of a thinner market behaviors when it's kind of overshooting levels more, going for these kind of a stop runs and everything. And ES is much more kind of slower. So I picked the Nasdaq for that. If I would be, for example, scalping and really trading just kind of one market on these kind of tick charts, I would probably go with ES. But for this kind of a 5-minute bigger swings, stop runs and all that, I think NQ is actually better. This is quite the opposite, but both Bitcoin and ETH are fairly thin markets, so it's just kind of a makes sense. Still the correlation is too big between these two, and Bitcoin is still kind of a king in the crypto space, so I don't think that makes sense to solely focus to ETH and not trade BTC. Gold and silver, kind of same thing. I never really traded silver. I traded gold quite a bit, so as that. Crude, you have alternatives to the crude. You can trade natural gas if you have a huge account, because it's very expensive futures contract to trade. You can trade Brent, but Brent is traded on ICE exchange, and it's very costly to get data for it and everything. So crude is once again fairly straightforward. And you have a euro. The alternative would be trading something like pound, which is completely fine. This kind of a personal preference. In terms of the order flow for this market, I would say that the best kind of comes in this kind of a NQES space. This is where you get always the cleanest order flow. Bitcoin is great as well. Obviously have this kind of order flow fragmentation. A lot of people always ask me about this. I do believe that behavior of retail traders is same across the kind of a Bybit, Binance, FTX or whatever exchange you look at. So the data should be more so similar. In crypto you're definitely kind of playing these kind of traps of retail traders, way more than in NQ, for example. But they also happen, the issue, just a second. The issue with these kind of a overshots in Delta, for example, in crypto, and Bybit going kind of YOLO, and it's happening quite often. So when you have something like that, like some clear trap, when you see that on ES or NQ, it's much more reliable signal when in markets such as BTC, when it happens almost kind of every day. Gold and crude, the order flow is fine. There is definitely some weird things going in gold due to the similar reasons as with euro, because obviously a lot of gold is traded on spot in this kind of a London bullion exchange. I think it's makes the most volume for gold trading, and obviously the euro, these are euro futures, but you are looking at the spot forex market has much bigger volumes than the futures. So the order flow in these two markets can be a little bit less reliable, and you will see that mostly in a cumulative volume delta. on some days, it's just kind of seems like a going total opposite. So you need to pay attention to that if you decide to trade these twos. Crude is fine. Only issue with crude is that you have a lot of contracts. Gold, crude, they expire on every month, so it's kind of a little bit of fragmentation between different contracts, but it's still fine. The schedule, it's from 8 a.m. to 12. This is the GMT +2, so it's like Germany, middle of the Europe time zone basically. You have London Open at 8, at 9 you have the Eurex RTH Open. This is where the European indices have kind of a cash hours open, so between like 8 and 10 a.m. you will usually find out the most opportunities if you will be trading these mornings. Usually in regards to markets, gold, euro will move quite a bit. These are usually the main markets you want to be looking at, Bitcoin kind of as well, and crude. And Nasdaq will be more active in the afternoon, where you have obviously at 2 p.m. You have a gold and bond market RTH Open. Cash hours for gold start at 2. I think at least maybe it's 1:20. I'm not 100% sure now. Sorry if I made a little bit of mistake. Yeah, I think bond started. It's 2:20 instead of 2. I'm sorry. Yeah, it's a little bit of a mistake. But at 3 p.m. you have a crude RTH Open, and at 3:30 the CME Open. So once again from like 2 until 5 you will see the most opportunities. At 6 p.m. there's a London close, which tends to be a break, and once there's kind of a slowdown in the markets, obviously you have then after that, between around 8 p.m. to 11 p.m. This afternoon CME session, where you have a lot of movements in both Bitcoin and the S&P 500, but like I said, you won't be able to catch everything. This last kind of a few hour window for a day is what I personally decided to kind of skip. But these 2 sessions are more than enough if you trade more markets, and even if you trade one, you should be able to get trades almost every day. So this is kind of a overall structure of what markets I trade, why I trade them, when I trade them, and so on and so forth. Now the strategy itself, obviously, like I said, I'm going with this kind of a day trading approach. Here's the thing, basically, when you start trading more markets, you need to find ways how to simplify things, because obviously, for example, I'm not looking at tick charts, because all the markets have different tick settings, so I would need to kind of constantly change the tick settings for all these 5 markets. Instead, I can just trade a 5-minute. Obviously, tick charts can reveal the important information sometimes. These kind of when there's a lot of trading going on, you have these kind of clean structures and everything. But once again, I decided it's the easier way for me to just kind of set it up on a 5-minute time frame. Daily, I'm not using weekly for this one. I am kind of still basically doing this kind of a this more of a swing strategy, where I look at weekly, daily, and H4 across around like 15 markets, but that's kind of a different thing. Maybe for the next video, and I even covered that in kind of previous updates and in the bootcamp. But for this kind of day trading thing, the daily chart is that all I can care about in terms of a higher time frame bias. And once again, you can see the daily biases. I talked about them many times before. The daily cluster is this kind of after the gap, basically. Very much a classic thing. This one is going to be the first daily bias. Then you have a failed swing on a daily, taking a prior key daily level, daily QM, and kind of a counter trend daily engulfing candle. So these are the daily biases. There is kind of a pros and cons to have a daily bias when you are day trading, because obviously you can end up basically in a situation. Let me just kind of show some example very quickly. What I mean by that, let's say the gold is not going to be the best one. This is actually a decent one, and here, if you take a look, basically you have this kind of a daily cluster here, and you would be coming with a daily bias obviously into the trading session. Let's, for the sake of this example, let's mark out the whole zone here, but I would generally just do this, and you can see the market came into the level and basically spent what is this, 9 days inside, before it actually sold off. So it's not like the daily bias didn't play out. It actually played out fairly well, but it took a long time to do it. Obviously, if you would then go to H1, you would probably be marking out some of these highs right here, which we didn't even take. So this daily is H1 swing high, which we had a failure here and sold off from there. But this can be kind of a tricky situation on some occasions, where you basically coming into the session with a daily bias, and the market will just kind of spend a couple of days there before it makes another move higher. So it's this kind of a tricky thing where you are right, but since you are dialed in 5-minute chart, it can get a little bit tricky. On the other hand, there will be days like this, where you can see it took out the low here on this daily candle, so you have this kind of a failed swing daily bias. Let's say that on the next day you kind of manage on lower time frames to jump in with your daily targets to be either this high or this high right here, maybe even higher, but whatever, and you will get into the trade that is immediately going to your direction with very tight stop, because obviously you are trading a 5-minute chart, and it's just the risk to reward of these things is kind of huge. If you would be able to kind of say play continuation from somewhere around here, with very tight stop targeting that, that's a huge winner basically. So definitely having a strong daily bias is a tricky thing. You need to kind of be a little cautious about that, definitely, because if you have something like a failure here, for example, let's take a look at that. You have a failure here. Obviously this one kind of worked out, but let's say that the next day doesn't do anything. You keep longing because you believe you have a daily bias, then we pull back, you keep longing, and it's just kind of slowly dies down, and you will keep trying to build a swing long for 4 days. You can lose a lot of money. So definitely a daily bias is a tricky thing, but like I said, you can really catch a huge winners if the trade goes your direction. So it's definitely kind of makes sense to use the thing and not ignoring kind of a daily directions completely. But for the most cases, you will be stuck in this kind of a section, this H1 5-minute execution. The old trades has to be executed in H1 flow. Basically, what I could kind of how I see these things, and what I basically do is I just look at the hourly charts every morning, and I pick up the hourly levels where I want to be trading for the day. I'm not looking at the 5-minute chart and being like, okay, there is some sort of for example, here, we are going higher, there is this retrace to the level. I'm just going to go long because of that, because I don't have a clean kind of a H1 level to do so. But on the other hand, for example, you have a this kind of a hourly resistance here, of this previous swing high. We take it twice. You have a large pickup in a delta here. If you're gonna take a look at the footprint, and I will upload all these chart boosts for Sierra under this video as well, so you can use them for yourself. But once again, you have this kind of a hourly resistance. In here, basically, we go above it. You have this kind of a stop run here in the string of zeros, by imbalances. We can't crack the level, we sell from there, once again from the hourly level. So this is definitely a more of a trades that I want to be taking. Another example would be if we're gonna take a look at gold. Once again, today we gapped up, kind of filled the gap, pushed higher, took out everyone who was chasing the shorts from the open, because obviously you just kind of need to think about these things. Market opened, we fill up the gap, market is pushing a little bit higher, we make a new high on a week, at that point it's Monday, take out basically this kind of a high from the open, and the market starts to struggle, and you will form this kind of a QM here, or you have this kind of a cluster area basically with a QM. This trade squeezes quite a bit. I didn't take this one today. It squeezed quite a bit, but the high stayed intact, and we sold off, to the new daily high basically. But once again, you have this kind of a hourly bias for the trade. You are not just kind of taking these 5-minute setups by themselves basically. So the hourly chart is the most important for the levels. I am basically looking at simple SR, this kind of first thing, the horizontal support and resistance, where you can get these failed swings, which then come into here. Then I look at the clusters and the QM patterns. Once again, nothing really new here. You have a impulse on a hourly time frame, make this kind of a cluster area, high negative delta before the move down. Market tests the level, pushes higher from here. Although this is not kind of the strongest example, there was no trade inside here when we tested it today. It happened at 3 a.m. and nothing really formed here, but once again, the overall area is where I would be, taking the trades basically. So and the last thing, obviously I have a footprint here where I kind of look at the positioning, mostly for the trap traders. Sometimes I'm looking at these imbalances as well, but I am usually looking at where someone is getting stuck in the trade when it comes to footprint. And then I have a TPO chart here, which I personally, I'm looking at the poor highs and poor lows. It's very easy visualization of, once again, where you can have kind of a reversal trades, and the naked POCs at the kind of cluster areas are a great factor of confluence. You can also be merging, profiles, as I mentioned previously. 3 and more days is usually a merge for me, but it does need to sit with the H1 structure basically. The H1 time frame is kind of still the most important when it comes to taking trades basically. Okay, so now let's actually cover the last thing, which is the execution. This was posted on Discord. You can read through it. I'm not going to go really just step by step. You can see where you can spot these different setups and stuff like that. I want to talk about this because this I feel is important, and this I feel a lot of you who were sending some trades in Discord, made this kind of a little bit of a mistake in regards to structures, because once again you don't want to be taking a trade where you are going to put a stop at a place as everyone else did basically. And these are these kind of a compressions. A lot of times you will miss the trade because of this, because these compressions not always get kind of tested, but it will save you a lot of bad trades as well in lot of the cases. So the simplest kind of visualization obviously would be that if you have the cluster something like this, basically this is not a good one to take because you have these kind of higher lows coming into it. But if the structure looks something like this, basically this is a good one because we took out the low here, we made a nice excess below it, and this is the great one, and looks like a QM here basically where you want to be putting your risk on. If I have a hourly, because obviously the failed swings are kind of a straightforward, if you have a level of resistance on hourly time frame, there is your previous high, let's say here, and you are coming back into it. There are basically two ways how to execute the trade on a 5-minute chart. The first one is, if we are going to break this, you will see this huge buying coming into it basically, or stops getting triggered on the lower time frames, on a 5-minute chart, something like this, like I said, the previous high. You see this, you can execute the market order and get into the trade right away. The issue with this is obviously something that happened today. The candle will close like this, you will get in, stop above the high, you will get stopped out, market will sell off. But in a lot of cases this will actually sell off. Today we really slowed down quite a bit, but there are a lot of situations which look like this basically, where you just kind of take this, I believe this takes this high here, but once again, if I would have a level here, get in after a candle close, market order stop at the high, you will get stopped out, market will sell off without you. So you can do basically two things. The first one is that you will want to wait for something like this. Obviously, you will form a QM at the high, you will have some sort of a swing, the last kind of a swing low before the high was taken, you will break below it, you have your QM, and you will go short. This is obviously the kind of an ideal example, therefore it's not going to happen too often. The other one, which I am kind of a fan of, is marking out the candle which made a high. This is the high delta candle which made a high here, and once you're gonna get below that, you can start actually going short. So for this example, let's see, we would kind of mark out the candle, that took a high, but we didn't really broke below it. Market is really kind of stays within the range, then it makes a new high. So once again, you will mark out this high delta bar, because obviously this is where the buying is kind of happening. So once we get below the candle, these buyers are really in a trouble. So we broke the candle here, and I would just kind of offer the retest, stop above the high, and then you have this kind of a nice level. The same thing here, but we didn't really tested this one, even that, this was one of the cases where this was really fast, but it would save you some money if you would just wait on a break of this one. After we broke, you could kind of play this with a bigger stop, but once again, you need to decide for yourself. So you have basically three ways how to enter on the H1 failed swing. The first one is obviously this kind of a very aggressive market order right when you see the stop run or the absorption on the footprint. I don't do this very often, to be fair. The second one is waiting for this kind of a perfect QM to form. These ones are the best ones, but they don't happen too often. And the second one would be marking out the last 5-minute bar, which should have the high delta and clean kind of footprint confirmation, and once that starts to break, you will just kind of go short immediately and target the next hourly level. Another thing, obviously, I am all these kind of candle closes and everything, it's not too important to me. You can see, for example, today on the euro, we broke the high here and we once again started to struggle. You have your high delta bar here, you form little nice QM, market then kind of comes back to test it, but we still managed to sell from there, even though the hourly candle closed through the level. Obviously it's best when the candle closes as this kind of failure, the hourly candle I mean, but it's not too important for me. What is important to me is how how the CVD looks, how the delta looks, how the lower time frame price action looks. So for me, it's not necessarily to pay attention to the hourly candle close, because obviously if this would be 2-hour chart, there might be a wick at the candle. This doesn't really change the whole perspective for me too much. So this is just how I trade the failed swings. The targets are on the hourly chart always, but the trade management, and this is something that is I think worth mention, I am when it comes to the 5-minute time frame, because if you have watched the video about the swing approach, I was telling you to give the trades a little bit of let me just check if this, I was talking about the giving trades a little bit of a more room. If you have a kind of a 30-minute trend, trailing your stop very aggressively under each swing low, is not often the best idea, because markets tend to do something like this basically, on the higher time frames, and it's kind of gonna suck if you are in the trade, and if you want to be in the trade for weeks, and you will get taken out just kind of a middle at the start of the move, and market will just kind of skyrocket from there. I see this very differently on a 5-minute time frame, because obviously the difference is if you are executing on H4, you are taking one trade in a week in the kind of best conditions, depending how many markets you trade and all these other things, but you won't be trading much. But if I trade on 5-minute chart and I take 3-4 trades every day, I don't really want to give the trades much of a room basically. If I sell this kind of a QM here and market breaks the low here, I'm moving my stop very aggressively. If market then breaks low again, I'm making my stop, let's say my target is here, then market does this, I'm moving my stop again. Obviously then something like this can happen, and I can get easily taking out here without reaching my full target. Well, it is definitely a possibility, but I know that the next trade is really coming fairly soon, so I much rather be getting out here than risking this will retrace all the way back basically up. So my trade management on a 5-minute time frame is definitely more aggressive than something buying something on a daily and just going to a 15-minute chart and moving stop right away. So this is something that you kind of should pay attention to as well. If I would be selling, I wasn't trading today, but if I would be selling the gold here on this kind of a failure, this is your high delta bar. Once you break it here, let's say you would go, you would get short here basically, if I would get short right away in here, I would be basically getting targeting maybe this low, but to be fair, all the way down here would be a better target on H1. If I would sell the gold right away in here, I am getting stopped out here, for a small profit. If I would have a limit order here and filled on this thing, I would most likely sit through this one and then move my stop once we kind of break this low, and then I would actually get, my take profit would get hit, but assume it wouldn't, I would place my stop under this high, market would pull here, take me out right here before taking the target. It is what it is, but like I said, the next trade is definitely coming fairly soon, so no reason to overstay. You're welcome. So this is for the failed swing, how to kind of execute these things. The QMs and clusters, FTRs, whatever you want to call them, are basically have two kind of ways how to execute these. First things first, you need to find a cluster. It's these things, where market really makes this kind of sharp move without a doubt, leaving these kind of liquidity gaps. I'm not a fan of ICT at all, but this is kind of a fair value gap indicator, which is basically a liquidity gap, which is just another kind of a rebranded name from people like Chris Laurie and Paracurve, but whatever. This indicator marks out these levels, basically. This thin kind of prices. If you would be looking at the footprint of this candle, you have these quite a big imbalances. The buyers are really stepping in. You have this kind of aggression on a very clear scale, and this is at the bottom of these. Basically, you will find your clusters. Obviously, as I kind of talk about this right now, I can find a single one. This didn't fill. This one didn't work. Yeah, of course, this is a classic kind of a situation, but yeah, these kind of gaps, after they get filled at the bottom of the structure, you will find out the H1 clusters. And how would I trade these things? Basically, there are, once again, two ways to do it. I wouldn't be in this trade, because the first one, when price is here, basically you are gonna put your limit order, at the thing here. You have the small kind of a very small 5-minute stop run in this level, so your stop theoretically could be here below the low, but I am still, for this example, to be completely fair, not fan of this kind of a compression to the upside, so I would be probably skipping this one. If, let's say, that this wick would come all the way down, let's say in here, this would be way better looking for me. In this case, I am going to place a limit order, stop under the low, next daily target, whatever that is, but you need to have this kind of excess on the 5-minute, which is clean. You don't want to have a cluster, once again, which looks like this being a cluster. You want to have a cluster which, obviously, on a lower time frame is going to look something like this. And I talked about this many times before. If the structure on a 5-minute inside this H1 looks like this, then this is a nice one. You're gonna put your stop below the low, set a limit order, target next something. If it looks like this, I am not placing a trade blindly. I wait for the price to get inside there and then kind of make this kind of a structural break into the next kind of a lower time frame cluster. You're gonna come here, a lot of negative delta, a lot of selling. The sellers get absorbed at the lows. You will shift the structure, you get this cluster QM, whatever, you are going long after the confirmation. So this is how I execute these two things, and obviously it's the same thing for a QM, it's the same thing for FTR. They are your H1. I don't have any example of this saved, sorry, but if I would quickly kind of try to find any kind of a H1 QM, do I see anything? Can see this some trades here. The advantage of the trading really a lower time frames is the fact that we didn't break the low here on H1. So if I would only be trading the hourly time frame, I wouldn't really do this. I wouldn't really there's a little bit of a double top as well here. I wouldn't really go for this on a H1 level, because this more looking to me as a 3 drive. You are kind of putting a failure here, but obviously if you are trading a 5 minute, you can basically mark out this as a possible QM, even though once again this is a candle close. For me it doesn't matter that much that hourly candle which closed here, closed above the level, but what matters for me more is that it didn't accept the new prices basically. And as you can see, this is a hourly failed swing. You make a QM. The New Zealand dollar futures are not the most liquid ones, so the candles looks a little shitty, but you take out the previous low, you make a QM, you can pick a trade. This is one of the failed swing things that I talked about. And let me just take a look at this on a spot market chart. This should be looking much better. And like I said, and then you can play this kind of a possible over and under. I wouldn't really trade this at all, but once you get the failure here, you can then say, okay, this is the hourly QM playing out. I'm gonna put my limit order into this 5 minute cluster, and you will most likely never get filled, and market would sell without you, which happens from time to time. But it's just the thing, you are just looking into these kind of a 5 minute patterns inside the hourly structures that are following the overall kind of a direction of the market. You can read out the things here as well, which I put down. But yeah, I do believe that's kind of it for how I really trade these lower time frames. Like I said, it's nothing really new, it's nothing too complicated. Working with 3 time frames, looking at the order flow, looking at TPO inefficiencies, where kind of value is, in what type of environment you are. Once again, this is a great thing to have a profile. Is obviously if you see market being in this kind of a bracketing environment, you are not chasing any huge breakout rates, but then after more of a prolonged period of time, you can then bet this volatility kind of compression will expand very soon. So the market profile is very nice for that. The naked points of control play a nice confluence, with the clusters usually, and poor highs, single prints, these are your kind of a liquidity gaps and all that. So the volume profile and market profile, definitely a great tool for kind of navigating the market. You can see, we have a failed swing today. This right now playing out in crude oil. We have this yesterday poor high, obviously key level, filling this kind of a rest of this here, taking out this poor structure here. On a footprint, buy imbalances, the huge delta coming into the level, the most volume is transacted at the high. On y-axis profile, you can see that all this buying is now stuck, and the execution of this, for this case, definitely would be the best to just kind of sell at the candle close. You have to be quick for this. but we break out a low here. We are not getting the QM retest. We tested the 5-minute candle that made a high. You can see these wicks tested it. Maybe going short here, stop above this kind of high, but yeah, basically this is one of those trades when you really have to sell here to make kind of a maximum risk to reward from it. And you can see once again we are filling this liquidity gap into this small kind of 5-minute cluster where we just bounced from, and it's kind of part of this hourly level here as well. So definitely good target for you to take profits off. I am going all in and all out from the trades. I'm not taking partial profits. I know this is a lot of people asking about this, but yeah, I am not taking a partial profits. I'm gonna go in a trade. I will trail the stop loss based on a 5-minute chart. I'm never going to use a break even, for example. I'm just trailing a stop based on a 5-minute time frame, and I am either going to hit the next hourly level or I'm going to get stopped out on the way towards it. But I'm not taking partials. I don't think it's a mathematically good thing to do. People just do it because they are scared of losing money and they want to secure some profits. Okay, so this was it. Once again, I hope this was helpful. Sorry for the shitty audio. In regards of updates, I will be, I am still going to be gone for a month until end of July, and then I'm moving to the new city. I will have to be in August looking for a new place to stay. We'll be moving. It will be a lot of stressful stuff. So excuse my less activity, let's say, but definitely in towards the end of the August and in the fall I am definitely going to be very active. I will be doing some live streams and some stuff for a Discord where we can kind of all talk about the trades and everything. So I do believe this is why I'm not doing all these kind of monthly sub things, because I just want to kind of just kind of have a time for everything. But this is not gonna go anywhere, and definitely after the summer I have a lot of kind of hopefully interesting things prepared, which hopefully will be helpful for your trading as well. Okay, so thanks for the attention, and I will see you in the next video.